Do you believe it makes sense to hold Tesla shares at this point in the market? Tesla stock is still trading below 200 today. As a result, some investors are frantically trying to liquidate their holdings. However, some recommend against selling Tesla shares even at its current price. Remember, this information: purchasing Tesla shares carries certain risk, just like any other financial endeavor. However, there are significant benefits in addition to the hazards. Get an additional $10 in cash, create an account on Moomoo, and add any money to it. This exclusive bonus is being offered in honor of Moomoo's 10th anniversary. Take a look at the following link. Moomoo is an excellent stock trading platform with a plethora of innovative, user-friendly capabilities. Many of you will likely find it extremely beneficial, particularly if you wish to take a more active role in your finances. Determine the best timing to buy and sell stocks, for instance. In the description below, there is a link. A number of benefits come with purchasing Tesla shares. To start with, mood drives the stock market's movements entirely, with neither news nor fundamentals influencing it. This implies that the cool-headed trader or investor can profit from the mob. Additionally, Tesla's strong brand and upscale offer viral marketing indicate that the company's basics are still intact, but this could potentially alter in the future. As of right now, Tesla is still the market leader in EV sales, and EVs continue to be the product category most favored by consumers and policymakers. Of course, purchasing Tesla stock has a few drawbacks as well. The first is the valuation. The second is Elon Musk's seemingly never-ending controversy, which unintentionally influences the stock price of the company. Renowned automakers like Ford and VW, among others, are likewise becoming more and more competitive. That being said, although some investors are eager to sell their Tesla stock, others are content to hang on to their shares. Elon Musk, the CEO of Tesla, stated that the company's manufacturing efficiency might be its greatest competitive edge during the annual shareholders meeting held in early August. But he also mentioned that robotics driven by AI would present one of Tesla's biggest long-term prospects. Musk reaffirmed the target of 20 million vehicles by the end of the decade and stated that Tesla might reach a production run rate of 2 million vehicles by the end of this year. As previously said, Tesla is a costly stock when it comes to valuation, but the business has consistently produced strong revenue and earnings growth over a number of quarters. Furthermore, the company's growth trajectory is still very much intact, according to yearly earnings predictions. The secret to Tesla's success is its business strategy. One of the greatest public businesses ever, Tesla upended the car industry, where no significant startup had been successful for decades. However, in the first week of this month, Tesla's stock price had noticeably fallen to below 200. Other factors are also impacting the stock, in addition to Tesla's COVID-19 related problems at its most prolific factory in Shanghai. Experts predict that Musk's acquisition of Twitter may have a number of effects on Tesla. Recently, Tesla renovated its China plant to produce over 1.1 million vehicles annually. The facility supplied 71,704 electric vehicles in October, according to a report released by Barron's last week. This is a decrease from the record 83,135 delivered in September. Productivity has suffered as a result of China's stringent COVID-19 restrictions, which have led to lockdowns throughout the region. This had an effect on Chinese consumer demand as well, which may be one of the reasons Tesla recently cut pricing for Chinese consumers. However, a factor unrelated to the company itself might be impacting Tesla shares right now. For months, there has been news about Musk's initial acquisition proposal and his actual purchase of Twitter. With Twitter being privately held, Musk has one more significant task ahead of him. However, investors in Tesla might not be most concerned about that. Musk borrowed money to purchase Twitter, so interest will need to be paid from the company's cash flow or another source. A number of businesses have said that they will stop running advertisements on Twitter until the social media platform's future course is more apparent. Musk might have to use his own money to cover the debt interest since there would be less cash flow as a result. For Tesla shareholders, the issue is that Musk may need to liquidate more of the company's stock in order to raise immediate funds. That might be the current factor affecting Tesla's stock, or it might be the attempt of other shareholders to capitalize on that potential. The first week of November has seen a lot of activity at Tesla. Elon Musk, the CEO of Tesla, announced that he would sell roughly 10% of his business stock in response to votes from Twitter users on whether or not he should sell his shares. Roughly 58% of voters said yes. Musk tweeted, "I propose selling 10% of my Tesla stock. A lot of talk lately is about unrealized gains being used as a tax haven. I don't take cash salary or bonuses from anywhere. I only have stock." Musk has already stated that he will need to execute a significant amount of stock options within the next 3 months, resulting in a substantial tax burden. His stock could be sold to raise the money needed to pay the taxes. This is one of the reasons that the majority of Tesla stockholders have opposed Musk's acquisition of Twitter from the start. Though selling that many shares is a lot, Tanaka Capital Management Chief Investment Officer Graham Tanaka says that neither Twitter nor the general public should have the authority to direct Elon Musk. Tanaka thinks Elon Musk still has a lot of creativity and value creation for shareholders ahead of him and is on a different path than Bill Gates. We could keep the stock for an additional 7 years after we have held it for 7. The executive from Tanaka Capital Management states there's that much room ahead of them in the long run. This will only be a slight fluctuation. AXS Investments CEO Greg Bassuk said, "They interpret the events of today as more of a sudden, intense response to Musk's tweet developments. In light of Musk's expected share sale and the possibility of other investors attempting to sell shares ahead of Musk, he thinks there will be some downward pressure on the Tesla price." Interestingly, nothing has changed in terms of the underlying fundamentals and the outlook for Tesla. Therefore, we believe it could present a buying opportunity, adds Bassuk. We're advising investors that to the extent there is a decline through today, tomorrow, that could be a potentially very interesting buying opportunity for those who already were. Bullish on the growth prospects of the company going forward, a large share sale always has the potential to disrupt a company's share price. A simple consequence of supply and demand, said Nicholas Hyatt, an analyst at Hargreaves Lansdowne. Nonetheless, if executed well, the sale shouldn't have a long-term negative impact on the share price and shouldn't significantly change Tesla's appeal or valuation. It's clear that the majority of analysts are unfazed by Tesla's recent stock market performance. Equity Capital's David Madden, a markets analyst, actually thinks there's no reason to think the company isn't performing well. According to Nicholas Hyatt, an analyst at Hargreaves Lansdowne, a large share sale always has the potential to disrupt a company's share price, a simple consequence of supply and demand. But he clarified that it shouldn't materially change Tesla's appeal or market value, and if managed properly, the long-term share price disruption shouldn't result from the selling. According to Russ Mould, director of investments at AJ Bell, investors might try to sell before Musk does. And if they still like the stock, they might then purchase it back at a reduced price. Additionally, Russ noted that short sellers are welcome to venture that the shares would drop, giving them a profit should the stock do so. Furthermore, according to Markets.com chief market analyst Neil Wilson, Musk only wants to cash out while things are good by selling some stock now that its worth has skyrocketed. As of right now, Musk controls about 23% of Tesla. Many in the public believe that he would sell as little as 5% to 6% of his holdings, with 10% being a larger figure that would surprise some investors. In the end, though, it's a manageable amount. Dan Ives, an analyst at Wedbush Securities, said, "We're not unduly concerned about. We would rather Musk rip the Band-Aid off now and sell this portion of stock rather than it lingering over the next year and feeding into any non-fundamental bear thesis on the story." In general, the majority of analysts do not find Musk's actions that unintentionally impact Tesla's stock to be very concerning. Indeed, the majority of them seem to get the reasoning behind Musk's action. This alone should convince you to hold onto your Tesla stock, even at its present price. Indeed, analysts think that this would be an excellent opportunity to start a position at a lower price for investors who plan to own Tesla stock for years to come. For more content about Tesla stocks, don't forget to subscribe to this channel.